Hello, this is Dario Fumagalli. I'm a trader and I'm following a trading method taught by another trader called FXGroup. He posted on Forex Factory a lot of setups, examples and other pretty helpful little things, and they prove to be quite useful to learn about some nice features of the markets. In fact, by following FXGroup teachings, you may learn how markets work, the market structures, and some very important data and information, like what the price is doing and where price is going. Now, this is the two important pillars of FXGroup trading method, because they tell us what the markets are about to do, and so we may plan a trading strategy, trading plan, and end up opening a real trade and then making some profit, knowing what's going on. I mean, by following FXGroup method, it's possible to actually open trades knowing what is going to happen next, even on a pretty long-term period. In this first video, I'm going to show people how to place the so-called price levels. Price levels are very important information for a market. In fact, markets tend to return in the future where they have been in the past, again and again. So if we find an important price level, we may make up a strategy that involves that level, and we can open a trade close to that level and hope to get filled in and then go for a profit. Price levels may play two roles: support and resistance. The support, as the name implies, is basically when the price hits some sort of wall and it cannot go beyond that wall. We don't know the actual reasons why it happens, but we know that it happens, and not only it happens, but it happens again and again. So we may use that information to pre-plan a trade for the next time the price is going to hit the same support again. Resistances are another kind of wall. They also do the same role, but they work in the opposite way. That is, they stop the price when it tries to go upwards. So now let's place some supports and resistances, and let's make what is the basic of any FXGroup chart setup, which is placing the levels, as he loves to call it. So let's place a level. We start from the monthly chart. I remind you that the FXGroup method is about trading on the daily candles, on the daily time frame, which means it is a longest term swing trading method. It's not an intraday method. In order to know what the price is going to do, we need to see the various time frames, because not only we want to understand the market, but we also want to open a trade when all the stars are aligned in our favor, which happens when we have the monthly chart, the weekly chart and the daily chart all aligned in the same direction. So in order to do a fairly comprehensive analysis, we may start on the monthly and start placing some lines. I'm going to label them as well. For example, place M for monthly, W for weekly, and D for daily on the various lines. Okay, the first line is the easiest because we have just to find the history maximum for the security. In this case I picked silver versus euro because it is actually something that FXGroup mentioned on a forum post when he said check out silver versus euro for an easier trading setup. So I am going to put it into a news. Anyway, we put the first level on at the top of everything, and we use the so-called effective level, which is the candle body. Some trading methods involve placing the levels at the top of the wicks or shadows of the candles, but FXGroup discerns, splits the price levels in different categories. So the ones we are going to use now are called the so-called effective levels. Effective means where price actually traded during the period and ended at a precise location, like in this case. If we put the same lines but on the at the top of the wicks, they will be called liquidity levels. Liquidity because it is where traders went all up or all down to find and use liquidity from other traders in order to make their trades. So now we place this one, and then we place the second easiest, which was what? It is the bottom price level. We find the history low for the security. At least it is the history low for the history I have in this chart. Now let's see what's next. Next we are going to see the most important swings, especially if they have been inversion swings, and we draw lines on them as well. By example, I immediately spotted this peak. I'm going to place a level on it. I'm going to slap a level. Here we go. Sometimes the levels end up at round numbers. When they do, you may safely edit the level and directly type in the round number. We might talk about round numbers later, but for now know that they are quite important for markets. They often impact on how the market is going to go up or down, because and is going to stop or do something at those levels. Now let's place the next monthly level. I see a quite important swing right here, and then we see other levels. Now a quite important task is to identify the truly important levels. I mean, you cannot fill in the whole graph with levels, by example placing one here, one here, one here, and so on, and make a mess. No, you have to make practice on a lot of charts and only pick the relevant levels. What is a relevant level? It is a level where price did something important. How do we know that the price did something important? As I said, one criterion is to see when it caused an inversion, like here. and even like here, but there are other criteria. Now let me finish the first criteria first, and then we'll see the next. Now I'm going to see this is a typical case of price doing something not exactly clear. So what do? We are going to pick a level which has multiple confirmation. By example, this one, if I place my line here, I can see that it indeed acts as support here, support more or less here as well, but it also acted at liquidity support, which is this candle got down here to take its liquidity to get the push upwards. Likewise, the line make a sense. I mean, markets are a bit like a pentagram. We have the candle, which are the nodes, and the price levels are the pentagram itself. We have to read some music up there, and music have to be written with a sense, else we get a cacophony and it sounds very bad. So what sense is going to do this level placed here? It makes sense because it tells us that price broke the level, which makes sense, close above, and the next month it retraced back on top of this level and then started again. So we know that price here did more or less what it was intended to do, while also doing something with a sense at all those other swings. We see the current swing is going to hit directly on this level, so a trading opportunity might appear soon. Now let's see if there are other important levels, and we can see the next criteria. A next criteria is to pick levels that enclose range markets. In fact, the range markets are a very important feature of the markets, and when we happen to enter a next range market on our way, we want to know that we are entering it, because the price is going for sure to do something. When it hits the range market, it usually bounces back, or it may break in, break out, and then react quite violently on it. So the best is that we know, so we are ready to take our decisions. I see no really relevant range market at this level. There is this little one. This is also a range market. Let me see if it makes sense to put a line, because we have to pick our lines. By example, I'm not going to put a line right here. Why? Because there are so many candles that trading is going to be unsafe. It's better to pick another security if price ever returns down there, because we are a teeny trader. We are going to get smashed by all this fighting between buyers and sellers. It is going really to be nasty. So I just skip this wall region and I don't care about it. This other range market is it got its role. It's quite visible. You can see it's a 2-month pin bar. It closes above this wall range market, and it's going to recheck, retest it, and then start with the buyers going up. But it's a bit too small for the monthly line, so I'm going to leave it out for now. Another decently important level we could fit in this place is the so-called median level. It's a concept maybe FXGroup is going to talk about one day. Basically, all the range markets usually have a middle level that deserves a look, because it may affect price. In our case, we have this rectangle, and within this rectangle we see the candles are breaking around this location, and sometimes in a quite strong way. By example, we see all those quite strong sellers, because look at this powerful monthly candle. They are stopped right here, which is more or less the median of this range market. So if we see an empty, a quite big empty area, we may add a level like here. You see, does it make sense? Yes, it does, because this candle is going to open above it and then goes back down to it, and so it makes sense for the price to do this operation. Then it makes sense to hit the support and then be pushed back up. Then it makes sense again here. It actually puts this candle. This would probably deserve its own resistance level, but not at the monthly level, in my opinion, because it's a bit too close to this one to be workable. We don't have to identify all the levels, as I said, only those that can help us to trade. If we put too many, our trades are going to last so little that they are not going worth to do anything. Anyway, returning to our talk, you see here there is a fight for this level. It's quite visible because this is a spinning top that is an indecision candle. Then it's closed below, it retests it with this other candle. So we see that the liquidity, this level is important, because for some reason big traders are going to hit this level to take the liquidity to trade. And then the price does again the same operation. You see this little inside bar is going to hit the same level and take more liquidity, and we see the current candle actually it's the liquidity as well. So this level is quite well placed, and it leaves us room enough to start a trade. Now at this point a quite expert trader is basically done with the analysis. If you are less experienced, we may proceed with a more in detail further analysis with more lines. So I'm going to unselect all and switch onto the weekly. As you see, the weekly chart is quite interesting for us, because we see both the effects of the monthly levels. Look at how nicely the monthly level are interacting with our candles, and how it makes sense on what they do. By example, look here, it's open, it's close above the level, puts up an inside pin bar, and then the pin bar close above the level, does a little retracement and then starts up. So it makes sense. Here, even if you're in the weekly, it still makes sense, because we still see the candle hitting and getting rejected down. I know that there are some little bits above the line, but because they are due to the daily levels, the daily candles enclosed in the weekly candles, so we cannot think a level as a totally exact level. It has to make sense. I mean, here it makes sense because it closed above quite good, but here it closed above just a little, and we see a long wick, a long shadow above the candle, so it would be bad to trade a similar setup. And then this way, I have to say, is a trading way used by some other famous traders on the Forex Factory, but it is not as safe as FXGroup teaches. FXGroup teaches always to find a confirmation before proceeding with a trade. In this case, the price breaks a little bit out, just enough to trigger the buys from some traders, and then it takes them down. As you probably well know, how lovely is the market to go take your order just for 1 pip and then totally go against. Another big feature of FXGroup trading system is to avoid those pitfalls. In fact, we see here a double bottom, price close above the monthly lines, it does a retracement, it puts a pin bar. This is a proper pin bar because it is at a swing low, and then this is the confirmation, which is basically the FXGroup trading system in a nutshell. And then the price starts and goes up and does its business. Now we can see the weekly level still interacting with the price all the way. How it's exactly. And by the way, if we see price doing this, it means that we placed the levels right. Don't worry if some levels are a bit off, like this candle or this candle, because it's how it is meant to be. Price is not a totally exact science. We have to deal with the fact that buyers and sellers are going to do exactly what they want. We can only go as close as possible to something that is exact. And now we get back to our chart. Let's see if we can see better with some zoom operation. Okay, this is on the weekly, still on the weekly. You see now it's a bit clearer about price, what price did here. What in the monthly was just 2 bars, now it's more it's easier to see. It was a range market. If we want, we can even put a weekly level on it, just to so that we know the next time we see it, we know that something fairly important happened here. Because notice that a weekly level is not exactly something weak. A weekly level is powerful. It's just less powerful than a monthly, but it's still a quite fairly powerful level. Now we are going to edit it. We put W. We pick a color, which for me is usually something like aqua or shine. And voila, we now have our little weekly level. Furthermore, if we want to make a clearer chart, we want to avoid cluttering it too much, and I mean, as we put more levels in shorter time frames, of course the levels are going to stay all in a smaller location, and they end up cluttering everything and making reading quite difficult. So what can we do to deal with it so that we don't find a monthly chart full of weekly levels and whatever that we don't want to see? It's quite easy. If in our most platforms give a function to select the time frame we want to see our bars in, and we can do something like this for Metatrader. We uncheck show on all the time frames, and now we're going to click we on just weekly and daily, and we leave out monthly. what is going this setting to do? It is going to hide the weekly level when we switch out to the monthly. As you see, it disappears. But when we go to the weekly or to the daily, it's going to show up again. So we have the maximum reading comprehension of our chart without losing any detail. Here we go. As you see, this weekly level once again makes sense and could be traded with FXGroup method even on the weekly if you have big enough pockets to put orders on a weekly time frame. In fact, you can see there is a double bottom and then it closes above by a little. You see, it puts a little pin bar and then it puts a second pin bar. Both are good pin bars because both are on a swing low. You see, little swing high because the bullish candle creates a little candle swing high, then swing low, retracement. It closes above because the seller cannot win the fight to bring the price back inside the range market. And then the next pin bar is a little less good to trade because we have to put the order above it a little higher than the previous, but it is quite very good. And then price takes off and does its evolution. Okay, now if we want, we can either just analyze the market as is on the weekly. You can see this market in this moment is very easy to understand because it put up a textbook double top. You see, first top, 2 weeks bearish pin bar, which is also a bearish outside bar, and then it puts a second top, which is once again another bearish outside bar, even if it looks a bit odd. And then it starts and goes down. It goes to mark and retrace on our monthly level. You see that it went a bit up. It's not exactly on the monthly level for the reason I told you before, and then it goes down. If we want, we can place more weekly levels, but I don't really see it's totally needed. We may place one more. Let's do it just for the sake of showing. We control shift of the mouse and we place a little level here. This weekly level, as you can see, we are going to place it in a more exact way. Let's see, we have always to double check that the levels we put make sense. I mean, the market has to do something coherent with them. By example, I see this level is going to hit a lot of liquidities, but it's still not good enough because you see this candle is meant to go down and instead it's close above. Is it correct? I don't know. Let's see if we can find a better setup that makes more sense than this. I put the level a bit higher. Okay, what happens now? Now I can see one of the best way to understand if I placed a level right is to see the confirmation retracement closing nicely on it. By example, here this is this double bottom. It closes above this level. It does a little retracement and you see the pin bar is quite small to see on the screen. Maybe if we can zoom in a bit, so we can also place the level a bit better. Okay, let's move it. Okay, does it make sense now? Okay, let's see. This candle is partially rejected. This candle closed a bit above. This one is basically a doji, which is a range market, and range markets often happens at the levels. This candle is not nonsensical because it opens above, closes below, and there is a big fight between sellers and buyers within this candle, and it ends up below, and the next one is going to retrace, confirm this candle, and go down. So this one closed a bit above, faking. It is a classical fake that is going to drag so many traders with them, and then the next one started at the high of this one, at the close of the one, and there was a very big fight between buyers and sellers around this level to conquer this level actually, and who won? The seller. So we see the seller going down, go, and then hit the support. Why do we see those thin tails and shadows going to hit the liquidity level? Why? Have you ever asked yourself why it happens? It happens because the levels both attract and reject price. A monthly levels is a way too good opportunity for big traders in the institution to go take liquidity. So they are going to drive the price up until it hits a lot of orders located at this level, and then the result is a strong pushback, which is going to make the price react and go the opposite direction. This is one of the most used strategies of them. Now we see price doing its own evolution. You see the buyers prevailed a bit and put this little inside bar. This is a particular kind of inside bar that FXGroup may one day take about. We see this close forms a little candle swing high, and then we see this second candle doing a swing low, put a pin bar which sits exactly in our weekly level, and then the next week we see buyers start again, go hit the level again. The seller tried to do something but did not, and the price start again. You see, it's logic, it's price doing its job. So we know that in this place our line is working fine. What happens here? Price close below by a bit, there is a fight, but price close above, then there's a consolidation, you see, but sellers cannot win again, so buyers start and go up. They close above, again below. It makes sense. This is there is another doji or spinning top in this case, which is once again a demonstration of the fact that nearby levels attract and reject price at the same time. We see two close levels are going to create those indecision candles because price cannot decide whether to go up or down, and then we see the seller going to take liquidity again on the monthly level they did here, and then we see price sprinting down with the liquidity they took from this place, and we get to the current day. So I'd say that this weekly level is placed quite good. At this point we are quite done because we usually don't go below the weekly to place levels. In fact, the FXGroup trading method is about finding a market situation, understanding the market, which means know what the price is doing, and then check the weekly to see if the market is still doing the same, and finally go to daily and only if price is still agreeing with the two time frames above, find appropriate setups that follow FXGroup teachings, which is basically wait for a retracement on a price level. Anyway, let's see what the typical trader would do in order to trade with the FXGroup method. Now I will do just a short sample. Usually you're going to start with an empty chart, and when you go in real, you're not actually interested in drawing all the lines all the times. I mean, you certainly don't need to draw those monthly levels since the price is stuck here, and you are not going to need to draw those either. So in the end, you just need basically this monthly level and this monthly level because price is ranging between them, and that's it. And it is why FXGroup charts are usually so clean with just what is needed and nothing more, because the more you put, the more it gets confusing, the more you start getting fear and start getting confusion about what to do next, because the more levels you have, the more psychological stumbling blocks you get on your ways. Now let's do what we'd see if we were in real. I'm going to delete the irrelevant lines, so allow me to make it if my mouse doesn't keep working. Okay, I could multi-select, but I'm lazy. Okay, so this is let's say a more usable version of our chart. We can do a better analysis with it. We can immediately see some important market structures. By example, we see that price went up here and now is going down, so the trend is actually going downwards. So we're going to seek for short setups, even at the shorter time frame and the short period. We see it's still going down. We may draw some help if we want to identify what the market is doing, which is basically a range market right now, something like that. Within this range market, we are within this smaller range market. Range market often are enclosed one within the other, so we could also draw a smaller range market here, which is more current, let's say it. Notice how price neatly fits in the range market syntax, let's call it, because we can see first a 2 months pin bar bringing price to the top, then it has a swing high, almost it's the range market resistance, and of course price gets put down at our previously identified level, and then it keeps going. As you can see in the monthly chart, we also have those indecision candles where a very hard battle is fought between buyers and sellers to win the level. Then price goes down, it puts this pin bar, but is quite bad because it is not at a swing low. Then it puts this other candle. Let me see. No, this one is not really a pattern I would suggest anyone to take. Anyway, price goes up again, hits the top where there is a bearish outside bar, and then once again price is going to sit and to fight between two important levels, because this resistance 2 is a level, and then we get to today's situation. This is what the price is doing, is basically is ranging. It's that simple. It's ranging inside this boundary on the monthly. Now if we really want, but I strongly suggest to only do this kind of drawings on the higher time frames, because on the daily is going to get messy and going to just to be confusing. We could also draw a trend line to see that we are in a sort of triangle, and maybe we also have a lower one, but at the moment the price is totally driven by this static because it is horizontal range market. Notice how the trend lines in FXGroup method are drawn from the heights and the lows of the candles, unlike the horizontal levels. Why? Because the trend lines are made on the liquidity levels. There exist special trend lines that are made on the effective levels, but those are used for other kind of advanced stuff that I'm not going to explain right now. They are quite rare. So the most used trend lines are those made on the highs and the lows, and the horizontals are made on the open and the close. Let's go now to the weekly. We can see a little effect of the trend line on price. You see that it does not really hit the resistance. It looks like the trend line is a bit scary for the price. It actually isn't, but it is a confluence of multiple levels in one corner that does those kind of effects. And then we can see on the weekly the situation I have described before. What is price doing? Is it doing the same thing that it's doing on the monthly? I would say yes, because it's still ranging. It's still within our monthly range market, which on the weekly is going to be a little shifted. As you can see, is not precisely drawn. This is an effect of switching the time frames, and you're going to see with experience what happens to those candles that happens to be at the boundary of this situation, that is a range market which is closing in a certain point on the monthly and closing at a little different point on the weekly. Anyway, we will see this in another video. Anyway, we can still see a smaller double top like we had seen in the monthly. Price does a swing and goes down to the target, which it already hit. So if we were in a trade, at the moment we are looking to close the positions and whatever. In fact, if you look at this longish bar tail, it is basically sellers taking profit and causing price to rise up because of the lot of taking profits that is happening. Now let's go to the weekly, to the daily, sorry, and see what happens. Let's see if there was any kind of setup or recent setup. As you can see, on the daily we still see how price obeys to the lines quite precisely. As you see, there's just 1-2 pip of difference. Sometimes the candle hit exactly, but the price is quite nice at being exact in what it does. Look at this candle. It's going to take liquidity as well, even on the daily, and it does its job. The only potential entry we could get it would be in this pin bar, but it would be a quite unsafe entry for 2 reasons. One is that we are quite close to the take profit, and the second reason is that we have no retracement back to this line. If we had a retracement back to this line, the trade would be much more secure to do, but it is not. What we can see here and here is that there is some sort of invisible level, which would be actually a real level, or that is a daily level. We can even place it. You see, now I'm going to show only on the daily chart, so it does not clutter the higher time frames. I'm going to say call it day, and we put it in some kind of orange. Okay, now we can see that price indeed did a retracement, but on a daily level, and daily levels are not to choose because they're not safe. Daily levels are fragile, and price can easily do all sort of trickery on them because they are not strong enough for safe trading. The minimum kind of level the FXGroup method allows to trade setups with are the weekly levels, preferably the monthly, but lacking them you can use the weekly or even the bigger numbers, but not the daily. I just plotted this level to show you that something happened indeed to price to make it do this little swing. This something indeed happened, but as I said, this is no safe setup. Now I'm going to delete this level because it's not going to do anything useful. Let's see if we had a FXGroup setup earlier. Let me see. There is an head and shoulders. Here there is. We are the only setups we are going to consider, since the price is going to the short side, both on the monthly and the weekly, would be only short setups. Why? Because if we go with the trend, we are going to have a lot of help in the most delicate trade situation, which is the first day. The first day is the deal breaker, because if you get stopped out in the first day, you basically lost the opportunity to trade, and usually the next day the price takes off and goes exactly in your direction. So what we have to make sure is always to get with the trend, so the trend is going to make us longer candles with more momentum. If you look, compare the candles, those are counter trend because they are going long, and the trend on the long time frames is going short. You see how price is going to work hard to climb, and all those little candles, little range markets, is very almost a painful process to go up, and then you see it. Price hits the confluence between the range market resistance and the trend line, long-term trend line, and it gets pushed down in a much more fluent way. You see big huge candles. If you start a trade at one of those candles, the next day you are already in the black. You are already done. You are not going to have the pain to go up candle by candle, taking like here. You see 1, 2, 3, 4, 5, 6, 8, 9 days just to move up 1 pip. If you go with the trend is your friend, as they say. You are going to have a much easier life. Now I cannot exactly find a nice setup for a short trade using the basic methods explaining this trade. Let me see if we can do something with this head and shoulder, but I'm not sure, because you see basically what we have here would be dynamic head and shoulders. The target has been reached before the setup becomes good, because we can draw something like this. and plot the target. You see it has been done already, so we cannot really do and find a nice setup here to, you see, because the price basically put up this candle. This candle was good actually, because it's double bar high, lower close, but it closes above the monthly level, and entering below this this candle is going to be very risky for two reasons. One, it is very big, so it's going to take a lot of stop loss if market goes against you, and not everyone can afford such a big stop loss. And the second reason, the most important, is that it closes above the support, and which means that it's not safe to believe that price will certainly go below, and so I don't see a nice setup. Let me see if I can find one in the past. Alright, I found a setup that we could take more in the past. I remind you that this method is not going to create a lot of trading signals. The secret to this method is to consider a number of, as you can see in my bar, a number of securities, and study them. If you have a good number enough, you're going to have a setup going up almost daily or every 2-3 days tops, which is more than most can even handle, because each setup is going to take some day to finish. You can have multiple trades open at the same time, but you have to take care not to go too much low with your account, with your trading margin. So your wallet is going to be your limit on how many trades you can have open at the same time. Now I can show you this setup. There is a monthly level. I have added a pair of level while I was searching for this trade. We can see that the price put a very big, huge, bearish outside bar, so big that FXGroup would call it a direct inversion pattern, and it put a quite small pin bar, bearish pin bar, right here, and this pin bar did a retracement on the monthly levels. This pin bar looks so inconspicuous, yet it is quite good for a number of reasons. First of all, it is small, which means that your stop loss is going to be quite small as well. You don't need to put a huge stop loss in this setup, so you can put more money for the pip, or you can limit your risk a lot. You're going to put something like a stop loss like here, just so that price is not going to immediately, or right here, you see this liquidity level, this liquidity of this candle, which is where price could go the next day to take more liquidity to propel down, but it is left to you where to put the stop loss. I suggest to put it right here, more or less, and it should work. But if you want to save more money in case of stop loss, you can also put it here, and it should work, because it's after a so huge bearish signal that it should go down smooth and fast. How did we get to this setup? Well, imagine you are doing your daily analysis, and so basically you see this is the last candle you see, basically, and you see this retracement, and a lamp lights up in your mind and says, oh, I found a potential good setup. Is it okay with the higher time frames? Let's do it in a practical way. We put a a line like this, a vertical line, and we switch to the weekly, and we see if it is going bearish like in the long period suggests to do. And as you see, we are right after bearish big bar, and so it is fine. If you go check the monthly, it shows that we are just after a strong bearish. Don't be confused by the fact it is green, a big bearish pin bar that at the time this candle was formed, the range market was this kind of size. So you see that the bearish pin bar would hit exactly the monthly level, which is a strong height, and then it retraced, and so we have a swing high, and price closes the candle. And make sure to always deal with closed candle, because the FXGroup method is only about closed candles. Never do it on candle still forming up, because it is not going to work at all. So we have a bearish closed pin bar. We switch to the next, to the opening of the next candle, and we go find again, we go see on the weekly, and then down to the daily, and we see that all the time frames are concording, so putting a trade right here is quite safe. Another reason why it's safe, it is that the pin bar itself has a first target, as FXGroup said on the thread. The first target of a pin bar is the high or the low of the previous candle. In this case we are going down, so the first target of this pin bar is this minimum. So we have some room to play with right at the first day. Basically what this setup allows to do is this: small stop loss, you put a pending order, never put a market order, but only pending orders right here, a bit below this small range market if you can, so you can avoid getting in a fake or something where pricing turns up. You put it like here, and the next day it should go about here at a minimum. It is the first target for a pin bar. Even if the market only goes down to here, you already have some profit, and you can already close like half of the position and have a free trade from that moment on. So you don't risk anymore. You are already in the market for free, and whatever does the price next, you have already taken half your profit, and nothing is going to hurt your wallet, even if the price goes totally against you. So this candle, even if it is small, is decently safe. It's not the best setup in the world, because there are much better setups, but this is what I found on this currency. What happens next? The next day, price not only goes to the first target, but it goes straight down. Another feature of price FXGroup method is that you don't put a take profit somewhere, but you wait till the next day is over, till the next candle is done, which is depending on the country. It could be in the GMT time zone, it could be like the London close, or like for this platform it could be at the New York close. You wait for the candle to close, and only then you open the platform, and you see that price not only hit the first target, but went directly down almost to the weekly line. So what you do is to take a good chunk of profit, because it was like a nice ride down, and then you are going to move the stop loss at break even. If the price started worse, that is lower, you would have to put the stop loss right to the candle that opened the trade. But in this case we had so much of a sprint that we can directly put on break even, and from now on the trade is completely safe. You can forget it completely and leave it go until the market stops down. What happens in the next day? You took your profit, and this long tail shows us that a lot of people took profit because it is quite long. The next day price goes down to here. At this point it's your choice about what to do. You can choose the position, you can take away a bit of position without closing it, whatever, and then you could move the stop loss if you want, like behind this candle. And so following the candle like this, it is one of the most rough money management methods, but it works for small trades, for short trades. Basically you want to let the profit run. You want to stop the loss for quick, but let the profit run. So in this case we only check the candles at the end of the day like this, and then at the end of the day, so we are placed here. It's true that we are going to lose this bit. If we day traded, we could be made a bit more money, but this is not a day trading method. So you only check the candles at the next close, and the next close is right here. You move the stop loss here, and the next day you see the price come back above the weekly price level, and at this point you have the choice either to decide that price is going against you and close the position, or to let the price run and it will, and the next day if you put the stop loss here, it would hit your stop loss and end the trade. Shortly after, the price puts another swing high and puts another nice pin bar again. This pin bar is even better than the other. Why? Because if you check, you can see it is away from this little danger of this range market that could have kept this one trapped. So it closes below nicely. It's also the same height of this two bars that forms a pin bar, and so it is quite safe. It is also close to the monthly level enough to be considered a retracement to the monthly level, even if it is not going to hit it completely. It's still okay, it's fine. It's just few pips. And so what do? You can see that this candle is, once again, it is small, which means it is nice to trade because it means low risk. So we are going to put stop loss like here. Let me make a straight line. Okay, you put a stop loss. Either you could put it here to be safer, but you see it gets huge, so you may as well put it right here, because you have this other candle acting as resistance. And so you put your stop loss here, then you put, let me see, an order here, and as FXGroup says, the first target of a pin bar is the minimum or the maximum of the previous candle. As you see, how nice is this opportunity, because look at the first candle, it is huge. It means that our risk reward is massive. Even just for the first day or the first days is going to be certainly a nice trade, because I think it is like 2.5 2-1 risk reward just for the first price motion. So it is quite nice. It's a rare chance we get doing this kind of setup. What happens the next day? The next day your order is taken, price is going to close here. You see that basically this level is more or less here, which means the price could be stopped here. There is a little danger, so you have to do your money management, which means basically liquidating like half of your position or whatever, so that even if price the next day goes completely against you, you are not going to lose a lot, but you are just going to lose the remaining part of the position. So in practice you are going to close a portion of your position. Let me straight this again. You close a part of your position, and now price is here. Then you move your stop loss. Okay, let's do this. You move your stop loss here. So you put it after the candle that opened your position, and then the next day happens in the markets, and the price closes here. A rather little improvement compared to the former day, and now you can choose, because it's always your responsibility to how to do your money management, and it depends on many factors, including your wallet size, or your need to take home some money anyway or not. So you see price doing this. You may decide that this tail is too risky. I mean, price could as well the next day could as well put a nice bullish candle that does this and create a double top. Is not something alien. It's quite normal to see price swing up again and take stop loss. So you have to decide if this long tail is too dangerous for you to go ahead and keep the trade open or not. It is only your choice. No one else can do it for you. If you choose to let the profit run, which is your risk and your responsibility, you could do a little trick to move the stop loss, but not right here, because this candle is too short, but you move it above this one, because this candle is a spinning top, and spinning tops are range markets basically. So you move your stop loss above a range market which is sitting above your price. Price will meet this candle resistance before taking your stop loss, so we can move it here. It's a little trick, let's say it. If you don't understand what I've just said, you can as well move it here and hope the next day price is not going to hit your stop loss. Anyway, the next day happens and price goes down, straight down here, which is a huge profit again. It even clears this swing, which means much less danger for you, because price is an obstacle less in your path to richness. Then we can put the stop loss here and choose to let the profit still run. But of course this is a very hard choice, because if price decides to return back, you're going to lose this huge profit. So most would choose to close a good size of their remaining position. I can understand them, I probably would do that as well. And as you can see, this long buyers created tail means that a lot of people decided to close their short position right here. So you see, it's not a very alien trail of thought that I'm speaking now. They took so much profit that the next day actually price went up to this other candle. So this is how much profit was taken. If you choose to not close the position, or you still want to leave a bit of position to let the profit run, you may as well put this stop loss. You could put it here, or you could put it here above these two bars, because price should meet a resistance when it tries to go back, if it tries to go up again. But if you put it here, you are almost sure that the next day your stop is going to get taken. It's because price usually gets back to close its gaps, to close the swings, and so it's very easy to get a stop loss. In fact, if you put the stop loss here, you see the next day you would be taken out. So the suggestion is to close up another portion of position, as I said before, and let the stop right slightly above the weekly level, which is going to play as a quite strong resistance. If you do this, the next day price is going to do this motion, nothing happens. The next day you don't change anything. The next day price is going to go a bit lower, and you still may choose to do nothing, or you could move the stop loss here. This is your choice. The next day price goes below, and this shows that price is going down actually. At this point you may choose to move the stop loss above this candle. As you see, price tries to go take your stop, of course, because price loves to do this, but it fails because we were prudent. And so the next day price goes down again and stops. A second, I'm going to, sooner or later I'm going to manage to hit this line. It's going right down here. At this point we are just a little before an important target, and I tell you that you are better to close your position when you get to those situations, because a lot of people are going to notice that you are close to an important level, and all those people are going to close their position. You see, this tail shows that more people again took their short profit. The next day you see more people took another profit. Now in this case we can see that the next day again price indeed hit the monthly level, but many times it does not happen. Many times price is going to do something like this bar, that is going to miss the level by 5-10 pips and then go back. So when you are almost to the target, you have to show respect for the market and close your position a little early, so that you don't risk losing your last bit of money. You feel free to ignore this advice, and you will see in the end my advice is going to help you more than it hurts. If you did not close, if you still choose to not close, you move the stop loss above this candle, or if you are especially conservative, you would still keep it here, because this is a range market, and range market protect the price quite well against stop losses. But let's imagine that you wanted to risk less, and so you put the stop loss in a more aggressive way. The next day price would do this doji, and nothing happens, nothing especially happens, and then the next day price hits the monthly, and it's officially done. The trade is officially over. Why I say it's officially over? Because a lot of times the trades are going to last from one level to the same kind of level, that is from monthly to monthly. If you draw two weekly levels inside, the trade is probably going to go from one weekly level to the next. It's harder for a trade to manage to start, by example, from a weekly and then be able to hit and break through a monthly, because the price has less momentum because weekly levels are weaker. In fact, if you look, if you did not close, not only you'll be stopped out, unless you did what I told you, that is to protect the stop loss with the range market. If you protect with the range market, you would not be stopped, but it is very, very hard to pull. It's psychologically very hard to pull. You will see when you will do it in real how hard it is to keep a stop loss so far from the current price. It is almost unbearable. Next, what happens? As I was saying, once price got to the target from monthly to monthly, let's say that price takes a break, and in fact you can see that price start ranging up and down with little momentum, if anything, very, very, very low momentum. If you stay in this trade, you are going to let your money in the market for 2-3 weeks, basically gaining nothing, because price basically does nothing useful for you for all this period. In this period you could have taken 2 trades in another security and then take good profit, instead of staying with your money sleeping inside this lateral market that is not going to do anything good. So my suggestion is, when you start from a monthly, you get to a monthly. If you see that price is not going to break through, sometimes it happens. When it happens, of course you are not going to close anything, but in this case price stopped before the next monthly levels, then just close down and be happy, because you have just done a huge amount of pips. I don't even dare to count them, and be done with it, and switch to another security and start analyzing it, and let this sleep, is long sleep, lasting weeks, while you actively trading somewhere else. This is my personal suggestion. Then everyone is responsible for their own decision, and you're going to do what you prefer, but this is how I would do it. Of course, we sort of know that on a very, very, very long term, as in most range markets, if price started from the top, it is going to eventually end to the bottom of the range market itself. That in the next 2 weeks is going to expand till here, and you see that in the end it indeed hits the bottom. But what happens is that, count the weeks, it's a lot of waiting for you, so you are better to just do the quick it is still 2-3 weeks profit, and then wait it out here and go trade another security in the meantime. Since you have the choice to trade dozens and dozens of securities, you will always have some interesting setup going on at any given time, and that's it. This is more or less how the whole FXGroup method works. It takes a lot of time to really learn how the market works, and all the tricks and nice things you can do with the markets. Anyway, it's a nice trip, and it's really worth learning how the market works this way. Not only is nice for the learning pleasure, but also for the earning pleasure. Said that, I bid you a farewell, and good trading and good work.